It's time for our second quarter 2014 Best and Worst ETF and Mutual Fund series of reports. We're going to start with all the sectors. The first thing we start with is our sector rankings. As you can see in Figure 1 in our report, the consumer staples sector is the top rated sector. Utilities is the worst. My favorite consumer staples ETF is Fidelity MSCI Consumer Staples Index. It earns my attractive rating by allocating over 40% of its value to attractive or beta rated stocks. And it's important to point out, our ratings on ETFs and mutual funds are about the quality of the stocks they hold and the total annual cost. And the total annual cost, as you can see at the link below if you want more detail, is the true all-in cost of being in the fund, which is often very, very different from the expense ratio that you'll see on the cover of things. One of my favorite stocks in the sector is Walmart. This is a great company and a great stock. This is one of the highest returns on capital of all companies in the world, but more importantly, that return on capital, despite the fact the company's been growing like crazy over the last decade, has been steady. They've been constantly growing profits even while they've been growing their capital base, which is an impressive feat, to say the least. If the market can give Walmart credit for just 15 years of profit growth at a long-term rate of only 6%, well below what they've done in the past, we think the stock could be worth over $150 a share. One of my worst rated funds overall is the Rydex Series Funds Utility Fund RYUTX. It's a utilities fund, not surprisingly, in this sector that we rank as the worst. And utilities, by the way, was ranked very poorly by us all last year in our sector rankings, and lo and behold, the utility sector did very poorly last year. Dominion Resources, ticker D, is one of my least favorite stocks in the sector. You got a company here that's profits are bad and its valuation is high. Specifically, to justify the $70 stock price, the company has to grow its profits by 7% compounded annually for 17 years. That's what's already baked into the stock price. Too much expense or too much valuation, too little profit. Avoid that stock. Bad risk reward. Now going on to Figure 2, we show the distribution of ETFs and mutual funds by our overall rating system. And as you can see, also looking in more detail with Figure 3, which provides details behind Figure 2 in a table, you see very few funds or ETFs get a very attractive rating, and there's even less capital actually allocated to those funds. Whereas the majority of funds and ETFs in the marketplace are getting a neutral, dangerous, and very dangerous rating. In fact, the most get dangerous ratings. 453 of them, and 54% of the assets, 54% of the funds out there, and 65% of the assets are in these dangerous rated funds. Figure 4 does an outline of which of the sectors actually have very attractive funds. Figure 5 provides the details behind that chart. Figure 6 shows you exactly which sectors have attractive ETFs and mutual funds. You can see it's only the consumer staples sector. And again, Figure 7 shows you again the details or the table behind that chart. And interestingly, I'm impressed by the investors in the consumer staples sector because most of the assets in that sector are in the attractive funds, so good job putting money in the best funds. Figure 8 shows the funds that get neutral ratings. As you can see, we're starting to see a lot more across the sector in both Figure 8 and in the table in Figure 9. Figure 10 outlines exactly where we see the dangerous funds or which sectors have the most dangerous funds. Again, telecom is leading the way. Figure 11 provides specific details again behind Figure 10. And Figure 12, last but not least, the very dangerous rated funds and where they are in which sectors. And again, you can see in utilities, you get a large percent of assets in dangerous funds. In fact, 94% of the assets in that sector are in funds that get a very dangerous rating. Not a good job, utility investors. Fortunately, there aren't many good choices in the utility sector in general. You should avoid that sector. It is the worst rated sector. That's our sector rankings for the second quarter 2014.